Hello, 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 everyone. Mike Arnold here, co-founder, Pat Trading Partners, along with Bob Icino. How's everyone doing this morning? Good morning, Sterling. Thank you, as always, putting in the news and the important figures for the day. We will review them shortly. Good morning, Heinrich. Good morning, Patrick. Who else do we have? Hey, good morning, John, becoming a regular. Thank you for the shout out to Sterling also. What else do we have going on? Good morning, Richard, Jacob, Heinrich. Wait, is that two? No, there's Heinrich. Wait, it was two Heinrichs. Okay, we got Heinrich and his clone in. What else do we have? Sterling. I said, well, okay, sad for the youth in the near future. I agree. I agree. Good morning, Legion Reaver. All right, with that, let's get straight to it. We finally got a pullback yesterday. Pretty substantial, but not hitting 2%. And 2% is a pretty magic number for vol funds. If it starts dropping 2%, they start reversing the unwinding some in vol. So that was pretty interesting. It only got down to around 1.5, 1.6%. So let's see what we got today. But we have really key lines in the sand, potential reversal pattern or a bounce pattern on the NASDAQ. But we got very, very key lines in the sand that I will review in a couple minutes. All right, you have the mortgage information coming out. Mortgage rates climbing a little higher. Applications dropping a bit. PPI numbers, this is the final revisions for December, coming in a little better than expected. So the revised lower. So this was dropping more than expected. We have Goolsby coming up. We have the EIA crude numbers. We got Bar and Bostic. So there's not much unless you're a crude trader coming out. Crude traders definitely have to pay attention at 9:30 Central. Hey, no problem, Heinrich. I'd rather see you in here twice than not at all. And remember, tomorrow we got retail sales and jobless claims before the cash opens. So don't get caught off guard by that. Today we have the mega caps. Apple's pretty flat, but Google, Meta, Amazon, NVDA, and Microsoft. I'm not even lumping Tesla, although Tesla is bouncing a little today. So it's by the mega caps. NVIDIA, which snapped back so quickly yesterday after the gap down. Will it continue its march? We will take a look at that also. But there's not a lot of red. You got Airbnb. Airbnb, after their earnings still down. Walmart. But you see here, there's just not a lot. Groups. Let's just do a quick refresh here. Only consumer defensive is negative. Technology, real estate, comm, service, basic materials leading higher. Technology up 104 basis points. CME, we have a pause in March, a pause in May, and then 4 cuts priced in. So still expected more cuts than what Powell has said. He said up to 3. We still have 4, but we got pauses even going into May after the CPI numbers coming in a lot hotter yesterday. Fear and greed still at the upper end of greed, only dropping out of extreme greed with this pullback. All right. So yesterday after the close, we had Airbnb, and it's down this morning. Robinhood Lyft. This morning we had Kraft Heinz, CME Group. Today after the close, we have Cisco. Hope everybody checked out the recent Futures Edge podcast where I talked about Cisco and NVIDIA. If not, go check that out. What else? That's about it. Tomorrow, a big one, Crocs. Crocs before the open. That could be market shaking. And John Deere. John Deere is much more important. I was joking about Crocs. So let's take a look here. Let's take a look with the daily real quick. Chris Palmer, good morning. Good morning, Tony. Sterling, let's see. What we're seeing in the car business, I'm guessing retail sales will be down. Is it starting to pull back? Christoph, hello. The podcast was great. Well, thank you very much. We all do our best. And thank you for Jim and Bob for having me on. So yesterday spiked down to the bottom of the rotation zone. Only spent a few minutes below the 62.5. Not even a 15-minute close. Look at that. Boom, boom. One thing I will give you a little thing. If you're wondering whether when you see this kind of price action, especially come off, remember, between the 50 and the 62.5 is a major reversal zone. When you see this kind of price action, you see the momentum price action coming right here, that is a pretty strong sign. Now, this is a very key area, not just because it's 62.5, because you have an outside engulfing bar in this between this 50 and the 62.5. So if we come down and retest this lows, this is the critical liquidation point. It just so happens to line up exactly with that 62.5. That should be your, if this is broken, everybody who's got long on this dip, and you had a divergence here, dip, divergence, engulfing bar, but this is now the critical level to watch for. This is the critical level. Going into the open, however, I'm looking at 49.80 is the first pullback level. 49.80, then roughly we're looking at 49.65, and then the key, because if you start dropping below this 49.40 level, we're going to continue the down move if we start getting a key close below there or momentum below there. To the upside, first target I'm looking, we're stalled out right now. We tested that 5K level and found a little resistance there going into the open. 5,006, 5,000, right between 5,016 and 5,021, and then above there, you know, I'm going back to 5,040, 41. Okay, if we're looking on the retracements for this, if we're looking, I know this is going to get a little crowded, but if we're looking for the retracements, you see here that 62.5 is right between that 516 and 21. That 62.5 is 517.50. So watch for that on a closing basis, at least to follow through with an hour close above that level. But you see how that 5,000, what did it spike up to? 5,075, this 5,125. Anywhere between that and the 5,017 is the potential rollover zone if it does stall out and they're on the recovery. It really needs to start pushing above that 5,017.50 to sustain the recovery move. So the two key things, if we drop back down, really watch again by that prior 62.5 where we had reversal yesterday. And if we rally, really watch that 5,017.50 level. That is going to be key. Above there, you have 5,033, then 5,050 roughly. Now for the NASDAQ, this does qualify for a double bottom. That is officially triggered. It needed a close. It's triggered on the 1 hour. It needed a close above 17,791.75. And here we got 17,793. So close right after European Open and then moving sideways. So what are the targets? And we got a really nice cluster here. A really nice cluster, 17,895, 17,945, 17,996. If we do our retracements, look at this. It's the 62.5. Let me change the color of this real quick. Let me do it. I should have changed it before. We do this. So look at this. Look at all this cluster right here with the 17,904.25 being the key level. So, and that's also the first target for the double. So that's very, very key. You get a close above that, looking for the higher prices to continue. Okay, so that's where we look. Now the key line in the sand, you also have the engulfing bar. Remember, you had the 62.5 down here, which it just dipped below very briefly, but between this 17,671 and 17,559 was the major support zone for a reversal, dipping in there, bouncing, dipping in there, forming a divergence, and the double. So this is very key. If you start getting liquidation below 17,580 and then a follow-through close below 17,559, watch out below. That's the key line in the sand. Going into the open, just going to take this down a hair to about 17,726 is major support. Minor support is 17,760. Well, thank you. Hey, welcome Trading Price and Time. Thank you for being here. Really appreciate you tuning in. Neat. Yes, the dollar index has closed above the 62.5. Dow, fascinating enough, came down, confirming the double, but not triggering it on the daily. Not triggering it. So, no double bottom here. Not really the same. You have the nearly engulfing bar on the 1 hour, but the key line in the sand for the Dow is about 38.1. 38.1. You lose that, it's in trouble. 38.3 is if we pull back, as 38.3 is the support coming in. Same difference. Just use the harmonics here. Everybody, unless you're really new, should know how to do that. Key area for the continued rally is 38,668 on a closing basis. Anywhere between 38,554 and 668, we could form another rollover move. All right, what do we got now? We got the Russell. Russell still, it bounced off the 50. You can see here on the closing basis, this 50 EMA. That's the EMA has been very, very key. It's one of the reasons it's on the charts. So again, the key closing is about 1953 on the Russell. If we drop back and close below that, otherwise, it's still trying to stair step higher in a flag pattern. So really, the key resistance for today is that 2,000. You get above 2,000, our next key major target would be 2025 again. Again, that key support 1952, 1953. The VIX elevated, but look at this pretty quick reversal yesterday. So very strong spike up with the bounce and those engulfing bars going into the close, the drop back down, and then the follow through today. So keep watching. 1540 is key, but it's coming back into key support about 1430. So if we start dropping below that, we could sustain more of a bullish move today. What else? The DAX, still, you have the minor wedge pattern. The other wedge patterns all completed. The minor one here, but the DAX not yet rolling over substantially. Still, I'd be watching on any pullbacks about 16,735 area. Any rally, key resistance is 17,119. The notes officially hit the first target yesterday. The notes hit the first target. So the official invalidation point at this point is 111.29.5 on a closing basis, or 112.13 on a trade through basis. That would be the farthest away stops you'd want to have possible. Normally at this, when you get this kind of bar, if it does start getting back above this 110, 26, 27 level, it starts getting very iffy for the pattern. But it's not officially over. Next key levels are 109 and 108. Remember, PPI numbers, the January PPI numbers come out on Friday. And we have retail sales tomorrow, which both can move this. 10-year, not hitting the first target yet. Pausing right here after a very strong up move. Still, first target is 4.395. So no stop raise there. The key support is back at 4.2. 10-2s, actually, interesting enough, this is another double bottom pattern, but we'll keep an eye if that were to reverse again. Dollar index, which we did, thank you, Pevneet, closing above the 62.5. So that trips the probabilities more to the upside. Again, not guarantees, probabilities. However, it would really have to drop back below 103.20 before I'd be concerned that that's going to falter. Until then, 105.27 we talked about this. I'm using the harmonics instead of the sloppy because this ill-formed inverse head and shoulders. I'm still using 105.27 as a target, then 106.11 on continued up moves. Pullback, your minor pullback level is about 104. Then you're looking at 103.80. Then the line in the sand is 103.20. Crude hitting that 87.5 yesterday. Really nice. Remember, the probability shifted once it closed above the 62.5 to reconnect with the 87.5, which is done. Now, we do have a little minor double top going into the EIA numbers. So keep an eye out for that. That would need a close below 77.71 with the full target potentially being 76.58. For anybody new here, here's the target levels 0.5, 0.75, and 1. Those are the harmonics that are used for the doubles. So just keep that in mind because we are an overbought. We are back at cycle tops. And we have a little mini pattern, and that could just take us back to the daily rotation zone. So that's just a little micro pattern. But keep an eye, and then we could get more follow through with cycles at the top if it stalls out up here. By the way, the next key level for this, the next levels, if it does rally up on the EIA numbers, is about 78.90 to 79, and then 79.30 is very key. Above 79.30, we're looking at 80, and then 80.74 would be, and remember, those are at least, they can be used for as targets to unwind partial position or at least a stop raise. Gold, this is still on the not back adjusted, still holding key support, back adjusted, breaking down below some key support. Really getting in cautious mode here in the short term because gold was not able to move up yesterday. It's moving inverse right now with the dollar index. Yen, remember we're in intervention territory. Anything above 150 really gets into intervention territory, so keep an eye out for there. So it's definitely in strong trailing mode. The next key target, should it keep running, is about 150, 140, and then the recent highs. Support now coming in at 149.55 to 60. Euro, yesterday, no close below the 62.5, closing just above it and pausing right there. But this is not a double or a potential double bottom. So any rally, the key resistance is 107.60. If it does close below this 107 area, the next target is 106.21. Spiders, nothing's going on with the pound. Spiders, keep an eye on this right here. Here's your key levels for the spiders. Yesterday, popping up, you see to 50% harmonic. That's where it all works out. That's actually where it popped and then rolled over. But 497.11 to roughly 498. What's the key? 71 is the rollover area. Closed above 498.71. I'd start watching for the gap fill. In front of that would be 530. 500.30 is the next target, which roughly lines up. I love the way these harmonics line up. Which lines up with Monday's low, and then it would be the gap fill to 598. Keep an eye on those futures, even if you don't trade them, though, for that breakdown area. You have the engulfing. It's not the true engulfing bar because it didn't break below here, but it's, that's a wide range bar. On the upside, you see the same momentum pattern off a reversal bar right here. So your key support in the spiders is 492. 492. Now we're all the way up here at 496. Your key support's 492, but going into the open, you're going to watch about 495.75, and then it would be for the gap fill 494.14. For the Qs, Q up the Qs, double bottom. I should still say potential because we need the price action during the day session to trade above 431.26. 431.26 confirms it, triggers it. You need at least a 1 hour close below 431.26. The targets 433.94, 435.69, and then roughly this 437.18 to 437.42 areas. The key support 430.35. Dropping below that, I'd start watching at least possibly with, if we get some downside momentum to the gap fill, 428.51. So that's where we stand there. Who else? Gamma is mixed today, leaning negative as of around 8 a.m. Eastern. Thank you for that. What else do we have? Let's see. I've missed a bunch of stuff. Thank you for posting in the Discord. By the way, if anybody else needs access to the Discord, just email me, support@PathTradingPartners. So what do you think of Bitcoin now? Well, let's go into. I was going to get to Bitcoin. Bitcoin closed above the 62.5, hit the next harmonic, invalidated the potential double. So there is no bigger reversal pattern. You see stalling out at the first harmonic, little pullback to the breakout area, rising rotation zone, closing above, that's again the 62.5, and now hitting roughly the second harmonic. That's this green line that was up there, right there. So those levels are hit. The next major target in Bitcoin is your 55,615. The major support at this point is right around, I'm watching, my major support level is 48,527. If it did drop below that, 47,180, 47,200. It should not, if you're going to at least continue the short-term bullish mode, 47,200 is very key. Hey Coco, where were you when the wedges? You said wedges don't work. When were you yesterday to the wedges that worked? And it's still. I thought you said Bitcoin to 20K this week. You said this week, Coco. Coco, we're not having the Nasdaq. I'm in the Nasdaq. You said Nasdaq 20K this week. We're not hitting that. And you disappear when we have down days. All right, so that's where we sit. What else do we have? We have Tesla. Then I'll get to NVDA. Tesla, not much has changed. A little gap today, but I'm watching to see if we form this little inverse head and shoulders. That would be the only short-term bullish pattern there. Other than that, still in longer-term bearish mode. NVIDIA, I'm really watching today. Today. Now, it did get the close above the 62.5, pulling back. So I'm still keying in. Now, in order for this to really be a solid double, it's got to trade above here again, this 733.62. The magnet price is still 739.85 up there. So do keep an eye on NVIDIA, because if it gets above here and really starts getting to 739.85, it would be a much stronger potential topping pattern. Then that would be the key line in the sand, would be yesterday's lows coming in at 696.20. But really, you had the quick gap down and then the pretty much immediate gap fill. So that's what I'm paying attention to. Remember, the next key level is 758.58. If you're looking at the minor levels for NVIDIA, if it does continue to march to new highs, we use our reverse harmonics. And you see, look at how this lines up. So minor on the breakout above the Monday's highs would be 752.35. And now we have a key cluster. A cluster right around that 758.50 level. So those are the key levels so far. Eric, the wedge was art. They actually do work a lot more than you think, else I wouldn't put them on the chart, Coco. Or only because Coco. Coco, you just crack me up. You're a funny person. I love having you here, Coco. What else do we have? What else? By the way, Meta still holding that key line in the sand yesterday. Still be watching that 454 area. 454, Meta starts breaking down. Amazon spiking below the 167.30, but closing above there and now gapping up today. So really pay attention. We still have on a closing basis 167 for Amazon. For a closing basis, any up move for the gap fill would be the target today with this candle, which is 172.34. Okay, Microsoft isn't really doing anything. If I could type, I got Coco fingers. Keep an eye on Microsoft though. See how we had the waning momentum, divergences. Really pay attention. We bounced off the bottom of the rotation zone, 21 EMA. But if we start closing below 403.50, we could be getting into a more exhaustive pattern and get into the bigger weekly pullback. So keep an eye there on Microsoft, especially with cycles rotating down. So that's why we're looking at some of these mega caps, because they could put a damper on stuff. What are my thoughts on ICT? ICT? This, I've actually never looked at it. Is this what you're asking about? Well, your key support's roughly about 150, 170. You start losing that, you could have a bigger pullback here. Other than that, your key line to really shift it to negative again is 149.18 on the positive side. Let's just see how everything lines up. You've already hit the declining 200 between the 50 and 62.5, and you've paused out there. But you start getting a close back above about 155. Next target is 157.91. Now anywhere between that and 157.91 is still the rollover zone. 157.91 is key to resuming any longer uptrend. Okay, and that's why there's probabilities associated with everything, Coco. There's probabilities. The probabilities are pretty decent on wedge patterns. Okay, and remember, it's just to the target area. It doesn't mean the market's collapsing. Boy, Coco is still alive. Hey, happy Valentine's Day, Coco. Oh. What do you mean? I don't know then about, but that's actually good analysis anyways. You have to, what about ICT? I don't understand what ICT means. Trading strategy. I don't know every trading strategy out there. Not actually heard of ICT. So, what do we have going into the open? Then I've got a jump. All right. Little momentum, so the key support holding into that. We're testing that 50 harmonic right now. Remember, 5,006, then this major key area, 5,016 to 5,021, with the really being 5,017.50. Let's take a look at the tick in here. All right, very, very strong opening. Very strong opening with that 1,500 tick. So really be watching to see on any pullbacks how it holds roughly this 400 to 500 level on any pullbacks in the tick. That is going to be key. So if we pull back to there, I'm going to be watching to see how come on, don't slow down on me now. I'm going to see how the S&P pulls back, but on the opening range, you don't really want to lose 49.92. Where's your testing of price action on between 20 EMA? I don't use the 50 SMA. I use the 50 EMA. It tests out a lot better. What's your testing of price action between, really when stuff starts closing below the 21 EMA, I start focusing on the pullback to the 50. But there's no concrete rule there. So really with this kind of price action topic, watch for that tick pullback and really watch that 49.92. CARR. Well, guess that I haven't looked. You were trading carrier. I haven't looked at it with its once that double. And it is a pretty interesting. There we go. Yeah, if that breaks out with support holding that, you could see some continued. I want to take a look at something here. And then I gotta run. But we haven't broken anything down yet. Oh, look at that. Look at that thing of beauty. So 25 harmonic. Support still holding. So that's your key line. But really then if you drop below that, it's really got to lose about 52 before I get worried on any bullish pattern. And then the resumption is about above 57. And if it does see carrier again stalling out at major resistance. Wow. Wow. Ooh. Is that valid or not? I'm just wondering on a monthly. Now I gotta go in here. Sorry about that. I'm just curious. It is. Wow. All right. So that's only on a monthly pattern, but there you have your very key line in the sand. 45.68. All right. With that, I think I'll wrap it up for now. Just one more peek in at the S&P. With any pullback, again, nothing has changed. And the tick, again, still holding this 400 to 500 area. We start really dropping now. If it starts dropping below zero and you break that, be cautious to the downside. I shall talk to everyone later. Thank you for tuning in. Thank you, Coco. Happy Valentine's Day to everyone. Happy Valentine's Day, especially to Coco. With the wedgies don't work, and I'll talk to everyone later. Bye for now.